Good morning, everyone, and welcome to today's RAAS Research Group Investor Webinar. I'm David Tasker, and I'll be your host for this session. Today's focus is on Horizon Minerals, an emerging standalone gold producer with a significant resource base in the Kalgoorlie and Coolgardie regions of Western Australia, and now a strategic advantage through the ownership of the Black Swan processing facility. Before we begin, a quick disclaimer. This presentation contains general investment information and doesn't take into account your individual circumstances. Please consult a licensed advisor before making any financial decisions. We'll kick off with a presentation from RAAS Research Analyst Joshua Baker, who has recently published a detailed research report on Horizon Minerals. Then we'll hand over to Horizon's Managing Director and CEO, Grant Haywood, for a company update covering current operations, near-term cash flow, and the pathway to production at Black Swan. We'll close with a Q&A session, and we encourage you to submit questions at any time using the Q&A function on your screen. We'll get to as many as we can, and at the end of the session, if we've missed any, we'll give you the opportunity to talk directly to the company. To start, I'd like to welcome Joshua Baker from RAAS Research Group. Josh will walk us through the Horizon Minerals investment case, including his current valuation metrics, how tolling revenue supports development, and the potential upside from Black Swan. Josh, over to you.
Hello, everyone, and thank you for joining us today. So in terms of the rundown of today's agenda, we'll run through an intro of Horizon, why we like Horizon, the tolling and ore sale agreements, the Black Swan development, and then through the valuation, peer comps, risks and sensitivities. So essentially just a comprehensive condensed version of the initiation report we released about a month ago. Next slide, please. So as David did highlight, Horizon is a gold-focused junior with about 1.8 million ounces around the Kalgoorlie and Coolgardie regions of WA. The company has a history of exploring and expanding the gold resources. They have a history of periodically generating cash flows through tolling and ore sale agreements, and a history of M&A, with last year being quite active with major acquisitions in Greenstone Resources and Poseidon Nickel. Greenstone brought with it predominantly the Burbanks gold, which will provide a good source of ore feed for the Black Swan refurb, and Poseidon brought in the Black Swan mill, which expedites the ability of the company to become a standalone gold producer, which obviously has the benefit of having a bigger and better production profile. The company also has 2 tolling or ore sale agreements in place, which supports mining from the Phillips Fine and Barara assets and offers the ability to generate cash flow. And there is latent optionality present in the nickel and silver assets. So the nickel came with Poseidon. Previous feasibility work is done, just requires a much more positive nickel environment. And then there's an interesting silver asset that sits within Nimbus, which is just up the road from the Barara mine site. Next slide, please. So why do we like Horizon? They have a gold resource of scale that can actually support a standalone production scenario, which is then enabled by the acquisition of the Black Swan mill through Poseidon. The capital intensity of a restart is typically lower than a new build, and then the lead times to produce from FID is typically shorter. And I should also highlight that the ability to do the engineering work and the timeline is also shorter. So essentially you have a cheaper and quicker pathway to sustainable cash flows. The company has a proven ability to mine, given the current operation at Barara and previous mining campaigns that they've done for tolling. And combine that with the JV at Phillips Fine, this will generate cash flow that funds ongoing exploration, corporate administration costs as well, and a material contribution to the CapEx for Black Swan restart. There's also, with the funding, the exploration upside remains very attractive, with at least 50 kilometres of drilling planned over the next 12 months or so. A lot of that would be resource definition drilling plus some expansion, and a lot of that will underpin and support the Black Swan refurb there as well. And as highlighted before, the cash flows from the tolling and ore sale agreements we expect will contribute a significant portion of the equity in the total funding package. Next slide, please. So just specifically on the tolling and ore sale agreements, obviously taking advantage of high gold prices with 3 local mills being Paddington, 3 Mile Hill and Greenfields. Barora is looking to mine about 1.24 million tonnes, which will produce around 46,000 ounces of gold. And Phillips Fine, which is a joint venture with BML, will generate around 11,000 ounces. We model gold price based on 4,500, which is roughly, I think, 12-13% lower than spot for the life of mine of both of these operations, which is less than 12 months now. Cash flows of 62 million expected on a pre-tax basis, about 45 post-tax. And just given the timing and a lot of the costs being sunk, particularly at Barora with that gap in the processing and mining schedules, there's probably about 57 million in cash to be generated over FY26 as you catch up on all the processing and the production and the cash receipts. June quarter, we expect to show that inflection towards cash flow positivity. September quarter will obviously be more indicative of what that run rate is as all the processing and mining rates catch up to each other or realign. And there's also optionality to do further agreements. The company has highlighted previous agreement to mine and toll treat Cannon with FMR. Penny's find had a feasibility, highlighted a amenability to toll treating, and even in our own work, we think Alpini actually offers a option for a toll treating agreement as well, as there's a decent inventory of open pit mine ore available there. Next slide, please. So the centerpiece of this opportunity, or the horizon opportunity, is the restart of the Black Swan mill. As highlighted, as a function of acquiring Poseidon Nickel late last year, closing early this year. That mill has a rated throughput of about 2.2 million tonnes per annum, and it's currently in care and maintenance. That throughput rate, as I highlighted in the initiation report, is a function of processing nickel ore, which is roughly twice as hard as the typical gold ore in this part of WA. And it has 2 separate processing circuits. So we think gold production can be restarted at about 1.5 million tonnes per annum, either using the SAG or the ball mill circuits. And there's a potential 5-year mine plan minimum that can be supported from the existing resource at that run rate as well. In our assumptions, we sort of have FID late this calendar year, early next calendar year. Refurb should take 6 to 9 months, which sort of places commissioning and first gold in late CY26, ramping up into early 27. We have a capex estimate of roughly 111 million, and this includes a working capital component of 39 million net, which is around 6 months of mining plus some early gold sales that are capitalised. And I think the underlying capex estimate's around 72-73 million. And then when you sort of compare that intensity based on the throughput, that's fairly consistent with brownfield projects that have been developed over the last couple of years, so namely Black Cat and Mika. Next slide, please. So in the restart scenario, we've modelled a mine plan of 5 years. We have roughly 7.8 million tonnes at 2 grams going through or being mined, 7 deposits, mix of open pit underground. 7.6 of that gets processed, so there is a little bit of net inventory build over the life of mine plan we have, and that delivers about 429,000 ounces or 85,000 per year. And there is scope to expand on this, given there's about 1.26 million ounces of resources not included. So you can extend the life of mine, or if there's the ability to upscale production rates, you could actually increase that too, based on the existing resource. Next slide, please. From a financial standpoint, we model a life of mine gold price of 4,500, generates just under 2 billion of revenue, all-in sustaining costs of a little over 1 billion, which results in a cost of about 2,429 an ounce, all in Australian dollars, I should say. Just under 900 million in net mine cash flows when you take off tax and capex, results in a net cash flow of 564 million, and at a discount rate of 15%, which is quite aggressive compared to what most people see. That results in an NPV of about 296 million. And I want to highlight that's to the current date, so it's including sort of the 6 to 9 months, and we do FID and all that as well. Next slide, please. So ultimately, in the valuation, we have come to a value of 16.9 cents per share on a fully diluted basis. As many would expect, the refurb of the Black Swan is the largest contributor with just over 10 cents a share. The residual gold resource is then the next largest component at 3.7 cents a share. So that is 1.26 million ounces at $85 per ounce, which was generated from our peer comparison analysis. The ore sale and tolling agreements generate 1.7 cents and the rest nets off for about 1.3 cents, which is predominantly just the smaller assets and the corporate G&A. Next slide, please. So in our peer comparison, we constructed a universe of 27 peers, which cover advanced explorers, developers, and a cohort of emerging producers that we think is very similar to Horizon. As the chart will show, if you're familiar with all of the individual names, the higher valuations are typically applied or come from companies that are in late stage development or entering production as well. And the emerging producers are a mix of toll and standalone companies, or in the case of groups like Black Cat, you've done a little bit of both along the way. So what this highlights, particularly more the curve as much as the absolute level, is that there is a clear pathway for Horizon's gold resources to be re-rated as they demonstrate consistent cash flows from tolling and demonstrate the economics and the pathway for restarting Black Swan Mill and generating cash flows there as a standalone producer. Next slide, please. So just highlighting a few of the key risks and sensitivities. Pretty much one of the biggest one is the gold price. We model 4,500 and spot's been sitting generally over 5,000 for most of the calendar year today. The discount rate is actually also a material sensitivity, and we use a baseline of 15%. And we do this because it adds conservatism to the Black Swan valuation, given it is effectively a desktop study at this point on our part. If gold price was to fall to 3,500, the NAV would be about 9 cents a share, which is obviously a lot lower than the current NAV we have. But I think what that highlights is that there's a lot of asymmetry on offer in an investment in Horizon, because even if the gold price was to go down, should they continue to execute generally to plan, this creates value that should more than offset that sort of negative influence of the gold price over time. This scope to materially re-rate is driven by that execution element in that sense. And one thing I do like to remind is that peer values and even NPVs are actually dynamic and a function of prevailing environment. But the cold curve generally holds. You do re-rate as you execute and get towards production. And I just want to reiterate that the point in time valuations would also be considered in line with the sensitivity, so you understand how these key influences drive changes in valuation at any future point in time. Thank you.
Thanks, Josh. A very comprehensive analysis of the value drivers for Horizon, and I think really sets the scene for the next presentation. I'm now pleased to hand over to Horizon Minerals Managing Director and CEO, Grant Haywood, for an operational update and strategic outlook. Grant, the floor is yours, and we look forward to throwing a few questions to you and Josh at the completion of your presentation.
Great, thanks, David, for the introduction, and also to Josh for the overview of Horizon. So if we can just move through our disclaimers, and we'll start talking about who we are. So obviously the key things are usually who we are and what are our assets. So looking at the faces on screen there, we're a very hands-on and technical board and leadership team. We cover the areas of geology, mining engineering, metallurgy and corporate finance, and we've got deep experience in the Eastern Goldfields of WA where we operate. Over 150 years of experience in construction. We've ran operations, exploration programs, resource development, and those sorts of things. So we believe we've got a great team that can execute our growth strategy going forward. So looking at a corporate snapshot of where we sit on the next slide. Our closing price yesterday was 5.1. We've got 2.4 billion shares on issue, market cap around 125. I've got cash in the bank of 15.5 million. We also did a $30 million placement in May. The first tranche has come through, 11.8 million. And then we've got a second tranche that's going to shareholders to vote on tomorrow at a general meeting, which will bring in another 18.2 million of cash into the bank, net of broking costs. We also have a debt facility, about $3.7 million US with Nabari Partners out of New York. So our EV is sitting around 116, and as Josh showed on a previous slide, sort of around that sort of $65 an ounce sort of EV per resource ounce mark. So very high level, 1.8 million ounces in the ground, 30 million tonnes at a pretty good grade of 1.8 grams a tonne. We're looking to generate 30 million of free cash flow just from our Barara project in the next year, and that's based on a 3,600 Aussie gold price. We've acquired that 2.2 million tonne per annum plant, so that's the jewel in the crown from the Poseidon merger that we completed this year in February. And we also have an extensive land package, 1,300 square kilometres in a premier mining address in the WA goldfields. Moving on to the next slide. So what's our strategy? So we're at the inflection point at the moment. So our strategy is to generate cash while the gold price is strong, and that'll help us execute our growth plans. So we've achieved steady state mining from both our Barara and Phillips Fine projects. These projects have been in operation since late last year. The money's been spent on them, working through the strip ratios, and now there's plenty of ore on the pit floors. And we've generated, particularly at Barara, significant stockpiles that we're now treating at Paddington through steady state and getting good cash flows back. So we've at that pain point, I like to call it, the max negative cash flow. And now through the September and December quarters, we start making some actually really strong cash flows going forward. We've got control of our own processing infrastructure. So obviously the mining we're doing at Phillips Fine and Barara is through third-party processing, which comes at a cost. And you don't have control over your own destiny as far as when you want to put the ore through and those sorts of things. So we're obviously got the Black Swan plant now. We're working through studies at the moment, which we'll complete in the December quarter, and then look at refurbishment early next year and get commissioning in late 2026. In line with the PFS studies that we're doing. So GR Engineering are doing the processing study, and we also have Mining Plus that are working also on the PFS, that are putting a 5-year life of mine plan together. So looking forward to get those studies to market in the December quarter. We have an aspirational target of being a 100,000 ounce producer, and as you've seen through Josh's research, I think he had about 430,000 ounces, so around the 85,000 ounces per year mark. So I'll talk a bit more about that as we go through the slide deck. So looking at probably more focusing on the right hand side, so you can see Kalgoorlie is right in the centre of the map there, and off to the sort of northeast you can see in blue the Black Swan processing plant. So it's 40 kilometres sort of northeast of Kalgoorlie. Hopefully you can see the radial lines coming out there. So all of our tenure and our resources are shown there on screen and are in an easily trackable distance to that Black Swan plant. So it's ideally located for our assets and also third-party assets in the area. We've got a conservative estimate of $150 million replacement value for that plant. We believe it's more than that. So the deal we did with Poseidon was to acquire all their assets, including the plant, was $30 million in scrip. And we believe a lot of our cash flow we're generating from our operations at the moment will largely fund that refurbishment of that Black Swan plant. We're also putting our cash back into the ground as well. So we've got a reinvigorated exploration strategy. So we're putting 50,000 drill meters into the ground over the next 18 months as well, particularly focusing on our cornerstone Burbanks asset. Next slide, please. So just talking through the current operations, Barara, we started mining in August and poured first gold bars in January. It's taken us a little bit of time to work through the ore processing agreement with Paddington. So the way it works is we generate stockpiles, and then we build them, then we drill them, we get assays, then we give the data to Paddington, then we talk about the grade that we're going to get allocated for that stockpile, and then we start hauling, and we receive 50% of our cash flow from them once we start hauling a stockpile. and then we receive the balance of our revenue once that last stone has been treated through the plant of that stockpile. So sometimes there's a sort of a nine-week lag for our first payment, and probably 13 weeks by the time we get our final payment. So we've built significant stockpiles on site. There's over 200,000 tonnes of high grade sitting on the ROM at RAAS at the moment, but the good news is probably 140, 150,000 of that has already been pre-approved and the grades agreed. So we're now in a good position where we've got steady haulage going to Paddington and bringing strong cash flows back. So as we stated earlier, aiming to generate 30 million at a gold price of 3,600, and obviously the Aussie gold price is over $5,000 an ounce at the moment. Moving on to our Phillips Fine project. So one thing we didn't want to do was stretch our technical and management capability and also our balance sheet. So with our Barara project, we're put our own management and technical teams in that, and they're managing the operations through a contractor. With Phillips Fine, we've actually JV'd that project out. So we've JV'd it to a very capable group, BML Ventures. So BML have done similar deals with companies like Bright Star Resources and Oric Mining, where they'll come in, they'll provide all the equipment, all the personnel, and also the working capital to fund the development. So that's what we've undertaken at Phillips Fine. So for that, we share the net cash flow out of this project on a 50-50 basis. So this project we started in October last year, poured first gold bars in February, and have been treating a couple of parcels through FMR Investments. We've got our last campaign that we're going to complete at FMR in August. And then we also have a 70,000 tonne agreement with Focus Minerals, which is also located in Coolgardie at the 3 Mile Hill processing plant. So aiming to complete this project, mining around September and processing in October. So we'll receive our 50% cash flow from that project early in the December quarter. And moving on to Black Swan itself. And looking at the aerial photograph, you can see on the right-hand side. So obviously this is a brownfields nickel site. So when we refurbish this plant, it's the typical hub and spoke method. So we'll be trucking all our ore from our assets through to the plant here. You can see the Black Swan disseminated open pit to the north, and then sort of moving sort of the southwest. You can see the Silver Swan sulfide underground there. We've got the processing plant on the left, and then to the right you can see the Black Swan tailings down there. So the tailings at the moment, it's got about 15 months of capacity. When this project was put on care and maintenance, they were part way through a lift, so they're part way through lift 4, and we've also got lift 5 approved as well. So we can complete lift 4 for around $2.5 million and have about 3 years tailings deposition, and then with the approved lift 5, we'll have just over 5 years of tailings deposition. So it's one of the benefits of getting a brownfield site is you fast track the approvals process. The other thing I love about this site is it's on grid power. So we shouldn't need diesel gen sets to run the mine over a long period of time. So we'll get a cheaper source of power, and it's also got its own bore fields. So we just need to re-equip the bore fields and turn them back on. So the key ingredients to run any plant, apart from the ore and the reagents, is power and water, and this site's got those. So I think a low risk sort of refurbishment and repurpose this nickel plant into a gold plant. So looking at the next slide, you'll be able to see a simple sort of the icons there on the screen. So the current configuration is those blue icons at the bottom through the flotation circuit that produced a nickel concentrate in the past. Whether it's a nickel plant or a gold plant, the front end of the plant is exactly the same. So the crushing and the grinding circuits that are already in place are exactly the same. So they're usually the high cost items, the long lead items as well, particularly the mills. So they're already in situ, and we just need to refurbish those. And then what we'll do is we'll build the gold circuit in and around the current flotation circuit on the back end of the mills. So all we need to build is the leach and absorption tanks, the electrowinning circuit, the gravity circuit, and then feed it through to the gold room. So a pretty sort of low risk approach with the back end of the gold plant there. What we also have with this plant is optionality. So Josh, sorry, mentioned it's a nameplate of 2.2 million tonnes per annum. That's based on the Black Swan nickel ore, which is very hard. The blend that we'll put through is a lot softer, our ore. So we're actually throttling this plant back to around 1.5 million tonnes per annum. And with our throughput, with our softer ore, we believe we can get it to probably 2.8 million tonnes quite easily if we need to expand. So we've got great expansion optionalities with this plant. And the other thing is, because we're building the gold circuit around the flotation circuit, we have optionality for other commodities as well. So obviously, with the Poseidon merger, we acquired 420,000 tonnes of nickel metal, and 240,000 tonnes of that is actually sitting at Black Swan. So should the nickel price turn, there's great optionality to refurbish that flotation circuit for a modest cost and start producing nickel concentrate again. The other thing we've got is our Nimbus silver zinc project, which is only 1.5 kilometres from our Barara project, so a 20-minute drive east of Kalgoorlie. It's got 20 million ounces of silver and 104,000 tonnes of zinc. So it's amenable to flotation as well. So this plant can also treat our Nimbus silver zinc project. So really like the optionality with this plant that we have with our asset suite, and it'll be one of the only kinds, particularly in the goldfields and probably in WA. Next slide, please. So looking at our project pipeline, we've got two cornerstone assets, we call them. So of our 1.8 million ounce resource book, Barara is 430,000 ounces of that, and our Burbanks project is 460,000 ounces. So between Burbanks and Barara, that's about half our resource book, and those two projects will underpin the feed for that Black Swan plant over a 5-year mine life. So as you can see on the right-hand side, we're currently mining Barara at the moment. The ore we plan to extract from Barara is only 15% of the tonnes and the ounces from that asset base. So there's still plenty of legs in Barara to feed Black Swan. And as we've talked about, we're also mining Phillips Find at the moment. Moving slightly to the left, we've done PFS work on a lot of these assets before. So there's already a PFS in the market in 2022 for a Cannon project, a small underground development that's already fully approved, dewatered, and we could cut the portal tomorrow if we had a contractor to do so. Our Penny Spine project, we put a PFS in the market in 2024 in December, and that project's also fully approved for 11 levels of underground development. We've also done a fair bit of work on Calpenia or other assets as you move to the left. So at the moment, we've got Mining Plus that are re-evaluating all our assets at a higher gold price. So previously, a lot of the study work's been done at $3,300 an ounce Aussie and lower prices. So we'll re-evaluate all our options through the PFS we'll deliver in December at a more appropriate gold price from where spot is at the moment. Next slide, please. So yeah, talking about exploration. So our Burbanks asset, I'll talk about separately when we move forward. But as I said, it's a cornerstone asset. We started drilling out of Burbanks a couple of weeks ago, and I'm putting 15,000 metres into an infill program at Burbanks at the moment. And then following that, we'll do a further 15,000 metres and aim to grow that resource even further from the current 466,000 ounce resource. We also want to put some drilling into a project called Wilson's, which is near the Black Swan plant. Greater Barara area, so you can probably see the Barara there, the 428,000 ounces, and the little dot there on the screen. So Barara, where we're mining, the current resources along a strike of 1.5 kilometres, but along that Barara shear, we've got 11 kilometres of strike. So we've got a resource 4 kilometres to the south at Golden Ridge. There's a thing called Chapel Bore, a deposit between those two. And then we've got strike extensions for another 6 or 7 kilometres to the north, which is largely untested, but there's a bit of smoke around there. So we believe we can grow the resource along that Barara shear as well. And then we also have our Coot and Crate, Pennies and Calpeni projects that we look to put further drilling in and grow those resources going forward. Next slide, please. So talking about Burbanks and probably focusing on the graphic you can see on screen. So the current resource envelope is in the yellow and the orange outlines you can see. And probably what stands out is only 30% of that asset has been drilled to 500 meters depth. So there's plenty of growth that we can do at depth, and it's also open along strike to the north and also to the south. You can see the grey dark outlines there as previously open pit and underground mining. So this asset has had 420,000 ounces extracted from it at a very high grade of 10.9 grams a tonne. So this is a typical Coolgardie asset. It's narrow vein, but it's very high grade. And really pleased that we've started drilling that asset recently. If you look at the table at the bottom, you can see that a lot of the resource is in the inferred category. So only about 25% of it is indicated. And to convert it into an ore reserve and to put into a robust mine plan, we need to de-risk it and increase the confidence in the resource. Particularly the underground resource, only 10% of it is indicated. So hence our large 15,000 metre program that we're currently putting into this asset to get more of that inferred into the indicated category. And then, as I said, we'll do a phase 2 drilling program that will commence after phase 1. So phase 1 should be about 4 months drilling, and then we'll move into growth phase and grow this asset even further. Next slide, please. So this is the assets we acquired from Poseidon, and you can see the plant there sort of in the sort of top left quadrant. So I've zoomed out a bit more. So obviously Poseidon have been a nickel company and been focused on nickel, and they've pivoted in the last sort of 15 to 18 months towards gold and did an extensive geochem and soil anomaly program out at Black Swan. And you can see they've identified 4 anomalies, and the one that really excites me is that northern anomaly, and it's not just the hot colours, but there's historic hits out there of 6 grams a tonne. Our caretakers out there have found over 130 nuggets, and they're based on 2 sort of areas of outcropping. So everything seems to be lining up, but this is very early stage. It's still greenfields, but I think it'd be pretty exciting if you found a resource 200 metres from our Black Swan processing plant. So looking forward to getting the drill bit to work later in the year, early next year at our Wilson's prospect. The other exciting thing about this package is only 5% of the drilling has ever been assayed for gold. So in the earlier days, just focusing on nickel, not much multi-element. So we see enormous upside in this package going forward. Next slide, please. Yeah, consolidation is, we're in a mature gold belt, but there's still a lot of upside in exploration as well. So you can see our tenure there is in red. We have a dominant land position in the Eastern Goldfields of WA in a really good mining address. We're the 3rd largest landholder in the region, only behind Northern Star Resources and Ora Banda Mining. So we have a lot of good country. A lot of our areas that haven't got resources on them have only been drilled to 50 metres depth and haven't had modern exploration techniques on them. So we see there's lots of growth in our package that we've acquired over a number of years. There's also consolidation opportunities as well. So there's assets that are in the majors that are too far away from their processing infrastructure that are amenable for processing in good proximity to Black Swan that we can acquire. And there's also other companies like prior to us that are relying on third-party processing infrastructure. So access to toll milling and ore purchase is sort of drying up a bit in the Eastern Goldfields, and we've had third-party companies knocking on the door and can't wait for us to turn our Black Swan plant on late next year so that they can talk to us about toll treatment and ore purchase opportunities as well. So a lot of consolidation to happen in the Eastern Goldfields of WA still. Next slide, please. And just to sum up with a simple time frame, so we're pouring gold and getting revenues back from 2 assets at the moment. We will consider other toll treatment and ore sales agreements. As I said, we have some development-ready projects that we can turn on. So it's that, do we turn another asset on now, generate more cash in the near term to reduce funding requirements in the future, or do we hold our powder dry, save that for the 5-year plan and get cheaper toll milling costs and actually make more money a bit down the track through Black Swan? So we're always continually assessing those opportunities. We'll complete the conversion and the mining studies by the end of this calendar year, and look to do the refurb work early 2026 for a period of 9 months or so, and look to commission Black Swan in late 2026. So thanks for your attention, and happy to take any questions you may have.
Thanks, Grant, and thank you again, Josh, for two great presentations. We now have time for Q&A with both of our presenters. So if you haven't submitted a question yet, you can do so using the Q&A function on your screen, but we do have a stack of questions that have come through. So I might just fire them all off at you directly, and we'll get through as many as we can. So Josh, starting with yourself, you've modelled a valuation of 16, almost 17 cents per share for Horizon. What are the biggest sensitivities or upside risks to that number?
Yeah, so I did highlight this a little bit in my presentation, but obviously gold price is one of the biggest sensitivities to that valuation. With obviously gold at 5,000 higher this year, if that were to persist, there'd be significant upside in the valuation, given I modelled 4,500 overall. And the other main element is that discount rate as well. I use 15%, which is quite high. It's not uncommon to see published studies from companies at 5% in Canada, but typically 8% or 10% in Australia. So I think as a company, does the resource definition drilling, proves out the ounces that support the mine plan, shows the feasibility work that sort of gives very firm real-world numbers. Particularly in comparison to my numbers, which are a desktop study, over time that discount rate can come down as well, which would then drive a lift in the valuation, all else equal.
And how material is the toll ore sale cash flow in the context of Horizon's funding pathway to Black Swan?
That's very, very important, actually. So, under the modelling I've done, there's 45 million of post-tax cash flow, up to 60 pre-tax. So I guess how tax losses are applied will drive how much cash you end up. But essentially, with capex of 111 million plus corporate on top, there's a sort of total funding requirement or funding of about 136 million that I have modelled, and with about 45 net from those mining operations, that would be about 30% of the total funding requirement. It's more than 60% of the equity portion, with most of the rest actually from existing cash reserves as well, given the recent raise and passing that peak of cash burn from the tolling operations. So it's a very material driver of that funding package, and it's great because it just reduces that future dilution that might occur otherwise, because the only way to fill that gap is to issue more shares.
And just a final question for you before I jump over to Grant. With spot gold now over 5,000 Aussie per ounce, how might that impact the economics or the valuation upside?
Yeah, so from an upside perspective, with the ore sale and toll trading, if gold was to average at least 5,000 over the life of those operations, there's potentially another 9 million in post-tax cash flow that will come out of that, which is obviously gives more buffer and runway, and reduces any risk of a future dilution as part of that funding package as well. With the Black Swan refurb, essentially a gold price of 5,000 average would result in an NPV 15 of about 389 million, which is obviously a lot higher than the current valuation I've applied using that. So effectively, for every dollar of gold revenue, you get over what I've modelled, like 96-97% falls through post royalties. So that's sort of the upside and the way it works from an operating leverage standpoint, because the only incremental cost on a high gold price is effectively the royalty that's applied by the state or any third-party royalties. So, and then in the sense of NAV, for the complete package or the valuation package for Horizon, if you assume 5,000 life of mine over everything, that NAV would be 20.5 cents plus for an average price of over 5,000. So yeah, so that's in the valuation standpoint, and sort of as I've reiterated, a higher gold price on the tolling reduces any future dilution risk, which we currently model as zero because we think it'll be sufficient for future capital requirements. And any timeline slips that might, come about, it does actually add buffer, because you deal with a lot of third parties as you do a lot of this work. So not always marching to the beat of your own drum at all times. But I would also like to highlight that you do have to think about the downside as well. Commodities can be volatile and the gold price could correct 10, 15%, and you should also understand how that leverage works to the downside as well.
Okay, thanks for that. And I'll now jump over to Grant, but stay there, Josh, because I suspect there will be more questions coming your way. But I'll now move over to Grant, if that's okay. Grant, can you walk us through the indicative timeline to first gold from Black Swan? Are you still on track for late 2026 commissioning as you outlined?
Yeah, we believe we are, David. So as I mentioned, GR Engineering currently doing the processing study to refurbish and repurpose the plant to a gold plant. And we've got Mining Plus doing the 5-year sort of life of mine plan. And then we have some other consultants and people doing, a bit more on the network, other infrastructure, things like, upgrading some of our roads, expanding our ROM pad due to the hub and spoke. We'll need a bit more ROM pad room and those sorts of things, and looking at a camp and those sorts of things. So we've got sort of all those study streams underway at the moment and still on track to deliver that in the December quarter. And then refurbishment, initial timeframes are sort of around that sort of 9-month mark. So get underway in the January sort of 26 quarter, looking through commissioning in the December 26 quarter, and then obviously starting to ramp up in early 2027. So we're on track at this stage.
Question here in regards to the assets you picked up as part of that acquisition. Are there any sitting there that are external to needs that you're sort of looking at going, yes, we've got a big land holding, but there's some assets there that potentially aren't needed in the portfolio?
Yeah, there are. So as you've probably seen, we've been quite acquisitive, but we don't want to grow for growth's sake. One of the good things I like about the WA sort of Mining Act is it's a use it or lose it methodology. So it's no good just landlocking everything up, especially if you're not going to put the drill bit to work and try and find some new things. So we're still looking at assets that we can acquire, particularly around the Black Swan area, but we're also putting together a divestment strategy as well, which we haven't put to market. But land holding costs, there's rents and rates, there's minimum expenditure requirements and those sorts of things. So it does cost a lot to hold ground as well. So I think, we like to turn the portfolio over, try and improve the quality. So there will be some divestments that will start getting underway in the back half of this year.
Question here regarding drill core from Black Swan and the previous work, as you mentioned, that's been done. Have you been able to go back and assay that for gold, or has that been assayed for gold to sort of generate some quick wins?
Yeah, the geos have had a bit of a look, and it's looking at the core itself and also the database and trying to find the right rocks, I suppose, that host gold. So they've had a bit of a look there. We've had some wins with some pulps that have been sitting in the drying shed. So there's some pulps that we can use for some more met test work and those sorts of things going forward. On the nickel side and those sorts of things, but gold side, there should be some opportunities to send some of those pulps for reassay on the gold side as well. But at the moment, we're probably more focused on the holistic plan of getting that 5-year life of mine plan together. Wilson's is early stage, so the keys for us at the moment are probably drilling at Burbanks, probably a bit more at Coot and Crake. And probably the near resource ones, and then the greenfields projects like Wilson's are probably a little bit down on the priority, but we're very excited about Wilson's being so close to that plant. So we've had an initial look and starting to gather our thoughts, but I'd love to do it late this year, but it's probably going to be in the first half of next year that we'll sort of progress Wilson's. But there is hopefully some quick wins we can have there as we dig through the core and the pulps and the data.
You touched on the current drill program and the exploration plan. What are some of the milestones that investors should watch for in the second half of 2025 and into 26?
Yeah, so the key is going to be Burbanks. It's it's basalts and dolerite, so it's quite hard sort of stuff to get through. So if we just have one rig there sitting there, it'd probably take us 6 months to drill 15,000 meters. So we've got the one rig there at the moment, but we're going to look to ramp that up and try and complete the first 15,000 meters sort of in around the 4.5 month mark. And what that'll do is provide a lot of infill information for us. So I think there'll be good news flow probably in the next sort of 4 weeks or so. As the team sort of processes the core logs, it splits it, sends it off for assay, and we start getting results back. So I think sort of early, probably about mid this quarter, we'll start to get results, and then there'll be consistent news flow on those results. And then following the infill program, we'll move fairly quickly into the extensional drilling as well. So news flow wise, there should be some good results from Burbanks. It's a high grade sort of a historic mine, so expecting good results from there. And then we'll also have obviously the study work coming in the December quarter as well with news flow.
You touched on the interest you're starting to get in regards to toll treatment at Black Swan. Putting your M&A hat on, does that interest also, I suppose, pique the board's interest in looking at further acquisition targets?
Yeah, it does. I don't think I'm telling any tales out of school, but resource and mining companies are probably always looking at a number of assets at any one time. So we're always looking at data rooms and potential acquisitions, and particularly now that Black Swan and where it's located, whether there's some other opportunities in the vicinity of Black Swan. And I suppose with the gold price being so strong, the usual story was to draw a radius of around 100 kilometres around a plant, and that'd be it. But it's probably 150, maybe even 200 kilometres away. You can process ore from, depending on the grade. So that just opens up a lot of opportunity there. So yeah, we'll still be fairly active in the M&A space, not only on potential acquisitions, but as we talked about earlier, turning the portfolio over and probably a few divestments as well.
Now, you touched on it during your presentation, but with the gold price at record highs, is there scope to expand your current ore sale tolling agreements beyond Barara and Phillips Find?
Yeah, it's possible. It's possible, but we are finding with this high gold price environment that it is drying up a little, and that's probably one of the advantages of having our own plant going forward. So there is opportunities. A lot of them are usually with the producers when they may have a bit of a hole in their schedule as they transition between projects and are in higher up in the profile and higher strips and those sorts of things. So you can pick up opportunities as they go along. But typically they're trying to fill their plants with their own ore. Yeah, so I think there is some opportunity, but it is getting a little harder to get into plants.
A question here regarding development risk and how you manage it across multiple fronts, from Black Swan to exploration and tolling. Is it a time to enhance the team structure, or do you think you've got that right to minimise development risk across the entire portfolio?
Yeah, our team and capability has grown substantially, particularly in the last 6 months. So we completed 2 mergers. So Greenstone in June brought in the high-grade Burbanks asset and another 500,000 ounces, and that gave us the confidence to pull the trigger on a plant that we had enough critical mass in the resource book. And look, that was with a fairly small team. But since then, we've got on Dirk Richards, who's a metallurgist and is project managing, the refurb and the rebuild. We've brought Adriana Scott-Muir on, who's a well-accomplished mining engineer. She's running the 5-year life of mine plan and also the approvals processes for the mines to get those approved and into shape. And we're also filling out the team as we go as well. So we're doing a bit of HR work at the moment because what we don't want to do is just be too late with getting the right people in the right roles at the right time, and we can't deliver for some reason, or the risk profile increases because we're not watching the right things. But we don't want to get too fat too early as well, and have a head office with an ivory tower with a lot of people not doing much. So we're working through that growth strategy now. And when we need those people, we'll pull the trigger and get them on board. So the team's already grown, and we've still got more growth to go to support our growth plans going forward.
May seem like a strange question, but I'll put it to you anyway. Looking back 12 months, did you think you'd be sitting here with Black Swan and a high-grade Burbanks deposit in the portfolio? And how excited are you that they're now here?
Yeah, that's a great question. Like, I suppose we've for quite a few years, we've always wanted our own infrastructure, and as I mentioned, we might not have had the critical mass to do it before. So I think the Burbanks asset is a quality asset. Like, we really like Burbanks, and that's why we're putting 30,000 meters into it. Probably about $7 or $8 million over the next sort of 6 or 7 months. So we believe it deserves it. So we're quietly chuffed that we're able to bring that asset into the portfolio. And even Phillips Find, I think the deal we did with the merger with Greenstone at the time was $11 million all script, and I think Phillips Find will probably largely pay for that acquisition, and then we've got the Burbanks asset, which is going to underpin a lot of feed to Black Swan over a long period of time. And the mill itself, like, we probably kicked the tires on 5 or 6 processing plants, most of them in the Eastern Goldfields of WA, some further afield, looked at can we relocate them and those sorts of things, and for various reasons they never ticked all the boxes for one reason or another. So I suppose it was sort of a bit of outside the box thinking on Poseidon and Black Swan in particular, particularly with the comminution circuit, the crushing and grinding being the same sort of for gold as it is for nickel. So that's when we sort of pivoted on our strategy and maybe look a bit differently. And yeah, it does look a bit strange, a sort of predominantly gold company buying nickel assets, but there's a bit of method in the madness. And yeah, we're really pleased with the work we've done, particularly in the last 12 months, like doing 2 key acquisitions and starting 2 mines with 2 processing agreements I think has really transformed and set the company up for future growth.
Thanks, Grant. Now, final question for you, Josh. When you initiate a report like you've done on Horizon, do you naturally go conservative?
Generally, yes. And I think it just depends on the nature of the company, its assets and projects. So, conservatism is double contingency and the CapEx estimate, 15% discount rate. I think a lot of that is driven by, the fact that it's a desktop study and you're using comparisons, and comparisons are a good guide, but not necessarily indicative of a very specific project. So in terms of the CapEx number I had, there's been some previous work by Poseidon. I've taken that sort of number as a guide, escalated it by inflation to get something that might be more indicative of it is today, because refurbing a ball mill or a SAG mill and the crushing circuit is pretty standard, mine to mine. And then on the back end circuit, for the gold circuit, I looked at several recent feasibility studies from similar gold companies of similar project size, and you sort of build that out. And as I'm not an engineer by background, I have to be mindful of my own limitations and the limitations of building comparatives, and you just add a little extra fat essentially into those numbers just to make sure they're conservative. And then, similarly with the 15% discount rate, I've constructed a mine plan that I think is, likely going to resemble what Horizon will produce in their feasibility work, but there's quite a few moving parts and assumptions in there. I've also got a decent ore feed from the Burbanks underground, which is mostly inferred, so you do have to be mindful of those risks as well by including ore sources. And I think just using higher cost assumptions that are based in reality, but adding some buffers and then higher discount rates sort of hedges against knowing what I don't know as well. But then obviously that conservative factor starts getting pulled out of the valuation and the modelling as the company delivers drilling results, resource upgrades, feasibility work, etc.
So, to recap that's what you'll be looking for this year is sort of the levers or the news and results that'll start to reduce that conservatism within your note.
Yeah. And I think it's generally just good practice to be conservative when you build a valuation. And then if I've got all these buffers of conservatism in there and it's still coming out with a very attractive valuation, and then when you use lower gold prices, it's still an attractive valuation and you're building a case for an asymmetric opportunity, I think that's just generally a good way to go about it, rather than being as aggressive as you can and using the highest gold price assumptions and very low discount rates, because you sort of create outcomes that might not be the most achievable.
Okay, now, as I said at the beginning, there was a detailed research note released, which Josh has referred to during this presentation. So I'd urge you to jump on and read that in full so you can understand his views on the company and its plans going forward, but also, as he's mentioned, the discounts and the fat that he's built into that, which the company will look to remove over the coming year and years as it hits the goals it needs to. Now, that does bring us to the end of today's session. So on behalf of RAAS Research Group, thank you for joining us, and a special thanks to Josh and Grant for their insights today. Josh, Grant, thank you.
Yeah, thanks very much, David. It's been a pleasure.
Yeah, no, likewise. Thank you.
A replay of this webinar will be available soon, and to access the full research report, please visit raasgroup.com. Thanks everyone again for your time, and have a great day.